Welcome, everybody. Michelle Ellis here with eXp Realty. I am here with James Reed with the Mortgage Coach and Suzy from Home Equity Bank. We are going to talk today a little bit about reverse mortgages because I think the three of us can agree that there's a lot of lack of education out there and uncertainty with this product. And so we're just going to dive into it, give you the facts, give you some information so you can take that and digest it and, see if doing something like this would be beneficial to you or to your family members. And we're just here to give you information. So super excited to have you both on today. Thank you so much. And so Suzy, what exactly is a reverse mortgage and how does it work?
So thanks for having me, Michelle, and thanks for having me, James. Reverse mortgage basically works this way. There's a calculator. We look at the client's age. We look at the marketability of where the property is located and the value of the property, and we come up with a number. And that number through the calculator allows the client a certain amount of funds. So the truth is, we do say it's up to 55%. So the older you are, the more you're going to get. The younger you are, the less, we're going to give you, just because situations change. We don't want to deplete clients' equity. So we make sure that we're cautious and we make sure that we're conservative and we're doing what's right for the client. That being said, a reverse mortgage, what I say is a client has full autonomy, full control of how they want to live their life, basically. When you and I'll put myself as an example. I have a mortgage. I have to make that mortgage payment on a monthly basis. No ifs, ands, or buts. This, with a reverse mortgage, you have that choice. You're not required to make monthly payments at all. However, there is interest that accumulates, full transparency. That being said, there is options to pay off that interest. So clients can make monthly interest payments, clients can make partial interest payments, or they can put 10% towards the principal and interest on an annual basis upon anniversary. But the difference is you must be 55 years old in order to qualify for this product. It is really a non-income qualifying product because there are no monthly payments. And if there's mortgages in place, we pay off that mortgage or any secured debt. Whatever's remaining goes to the client.
Right. Okay. James, you want to add to that?
Yeah, I totally agree with what Suzy is saying, and I think it's important that people don't realize, like, when they bought their homes, and they're usually at that age point, like what the value of the homes were when they bought it. So they did what they had to do. They even paid their mortgage off, and now they might not have a pension. They might not be able to qualify for anything else, and they need some more money. So if you go to the bank just living off of CPP and OAS, you're pretty much stuck. You don't have any money to qualify, even though you have all that equity in your home. So I think it gives them a bit of a hope, a relief to stay in their current property.
Right.
Absolutely.
Okay. And so Suzy, just to clarify, so it's a 55 plus product. You have to be
Correct.
55 and
Yes.
over.
You
Okay.
must be 55 years old. And if there's a husband and wife, and regardless of whoever's on title, even if it's only one, we do take both into consideration. For the purpose of something happens to one, the other one remains status quo in the home.
Right.
Last thing that we want to do is say, hey, you know what, you got to pay up. So
Yeah.
that's not the business that we're in.
And
And we
then,
will go ahead.
sorry, I
Go
was
ahead.
just going to say, so if one spouse is 55 and another spouse is 45, how does that work? Is there a disqualification system in that sense?
Unfortunately, we won't be able to do the deal. Both
Both.
must be over the age of 55. Correct.
Okay. Perfect. Um, So then how is this different from traditional mortgage or a line of credit then? Like, is the interest rate different or how does that work?
Yeah, the interest rate is probably a little higher, um, but with a line of credit or regular, when you go get a mortgage at a regular conventional institutional mortgage, uh, you have to qualify for it.
Right.
So, and there's a stress test, right? So, as James mentioned, with OAS and CPP, there's not a lot of clients right now that are able to qualify. That being said, this product is non-income qualifying. What do we look for? We make sure, can the client maintain their property taxes? Can they maintain their house insurance? And that's basically it.
Right. Which
Because
is
they're
good because they don't have to have like a specified income coming in to access that fund.
correct. Correct. You have to have some income in order for us to be comfortable with you keeping up with the property taxes and the home insurance,
Right.
but we don't qualify it based upon that, just like a regular institution. And with a regular institution, there are required monthly payments. With us, there are no monthly payments required.
Okay. So, I'm just trying to think here. So is it an open loan? So if they decided so they take a lump sum of money from you
Mhm.
for the home equity, and they come into some money or something and just want to pay that off. How does that work?
So we have terms. So we have an open term
Right.
mortgage. Full transparency, it's the rate.
Is she?
She's
Am
still
I?
there.
Okay.
Yeah, basically I could jump in there too. They have different terms. They have different you get to pick. The great thing about Suzy as well is she'll sit down and talk with the client as well, just to make them feel more comfortable. That's the way I like to do things. So I like never push a client into something without being educated with it, especially something like this. So everybody's case is going to be different. Everybody's mortgage is going to be different. Everybody's plans are going to be different. They might have like a lot of children that they want to leave like property to. There could be like 6 7 kids sometimes, so you just never know, right? So
Right.
it's everybody's like situation is different, and that's why I try to get as much education out there, because a lot of people go by one person's case and say, oh, they're scammers, they're trying to take your equity and all that stuff. No, you need to get educated before. If you work with me, you have to get educated before you jump into something like that. And it's just an option. You're not forced to do anything. So
Right.
that's
But
what's
knowing your
important.
options can help you help your family or help yourself, So
Exactly, especially in the GTA like even out where we are as well. It's like people did get a good deal on their homes when they did buy them when they're at that age, like most part, right? So now they think they're retired and they might not have a pension or a lot of savings, and like, well, I got equity, like why can't I get approved? I need money.
right,
And it just doesn't work that way, right? Because you have to qualify for that regardless, even if you have $1 million worth of equity in your home. So
right,
this is just an option that allows them to get educated on it. It might not be for you, but if it does, it works great.
right. Sorry, Susie, James
You
stepped
lost
in.
me. Yeah, I'm so sorry about
No
that.
worries.
Technology when you're on the road.
It's a love hate.
Yes.
Yeah.
My phone overheated.
Oh.
Oh no, that's happened to me.
um, so one other question that I have, I guess, in this scenario is what if they end up wanting to sell the home? So how does that work?
So depending on the term that the client has, so we look at reverse mortgages as always like a 5-year term. The
Right,
1 year, the 3 year, it just really means it's renewable. There are penalties. So
right.
listen, if it's between year 1 and prior to year 3, it's a little bit more expensive. If the client sells it at after year 3, it's 3 months interest.
Okay.
That's it. If the client decides they want to go into a facility for assisted living, then we deduct the penalty by actually 50%. If the
Okay.
client passes away and they need to pay off that mortgage completely, there is no penalty at all.
Okay. Very
Yeah,
good.
yeah. There's a lot
Um,
of options. There's a lot of options with this product.
and so it's it's curated for the client, which is nice because obviously everybody has different they're in different seasons of their life, and so you kind of cater to whatever it is that their goals are, basically.
Whatever makes
Yeah.
sense. We do purchases. If clients are looking to purchase a vacation property, we can tie it to their owner occupied with a reverse there. If clients are looking at buying investment properties, we can utilize a reverse mortgage as a blanket, always tying your owner occupied as well. And what people need to remember is this product there is no tax implications.
Right. Which is
So,
great.
which is great. Like,
That's the big one.
that's the big one, right? We have so many clients who do have, quite the portfolio. That being said, once they liquidate those investments, there are huge tax implications. So to be able to do something with the home that you've worked super hard for, to utilize those funds and not be taxed on it, it's beneficial, much more beneficial for the client.
Right, for sure. James, do you want to add to that?
Yeah, and I think too, like working with us, we do watch the market. Like I think a lot of people get frustrated with it because they jump into the product and then that's it. They just like they're not watching the market conditions. They're just, hey, here we go. And then they want to borrow some more money when their term's finished and they don't understand why, because the property might not be worth as much. It's stuff like that. But if you're watching their product and you could educate them on it, they'll know, right? Like, are you paying any interest payments on it? Maybe, get a little bit more equity in there, maintain the home. So, an appraisal's done, you will get the value of it. And, the money will be there if you need it.
Right. And so this may be like an amateur question just because I'm not, super familiar with this. So do they have to be purchasing real estate, or can they just take that money out and use it for anything?
They can use it for anything.
Okay.
Yeah, we will ask and make sure that, they're utilizing it for the right purposes.
Yeah,
Because
they're not
at
going
the
to
end
go
of
and
the day,
gamble it away.
well, at the end of the day, we want to make sure this is for their own benefit, right? We want to make sure that we're helping out and we're doing what's right for them. So sometimes we do ask. When there's power of attorneys, we're a little bit more due diligence. Does that mean we won't do the deal? Absolutely not. So yeah, we're just cautious. We're making sure that we're doing what's right for the client.
Right. Now, when it comes to evaluating the home and what the home is worth, do you guys have professional appraisals go
Yes.
out? Okay.
Yeah, we do. We have a professional appraisal. And as you asked, for those funds, they can gift it to their children. They can help their children get into the market earlier. They can purchase a vacation property. They can just live their life and go on that vacation that they've always wanted to, or buy that Ferrari that they've always wanted to. It's up to
And
them.
I think that part of it is huge too. Nowadays, like with the house prices the way they are, right? Kids are having a tougher time saving up. So a lot of the parents, will take that equity out and help them out and purchase their home. And I think you get to watch them, you get to see how they're managing the money that you're giving them. And I think it's a huge advantage.
Nothing more rewarding.
Yeah.
Because getting them into the market now is better than getting them into the market 5 years from now. So, you know what I mean?
100%. Yeah, and
Exactly.
their equity continues to grow as well, right? Hope,
Right.
provided that the real estate market doesn't take a massive plunge, the value of their home continues. So the equity continues to build for them while allowing their children to continue to build their equity at an earlier stage in life.
For sure. And so when it comes to the loan itself, is this dispersed to them in a one lump sum payment, all at once, or is it like a gradual?
So this is a mortgage just like any other institution. We are a federally regulated institution. We've been in business for over 40 years. It's just like a regular mortgage. So let's say the client qualifies for $500,000 and they have a first mortgage on there for $250,000. We must pay anything that's secured because we can't go in second position. We have to be in first position. So we'll pay off that $250,000, and whatever's remaining, the client can decide. They can take it as a lump sum into their bank account, Or we also have income advantage, which they can say, you know what? I want to pay off that 250, but I'd like a steady income flow every month. We can do that as well. $1,500, $2,000 a month that we basically put into the client's bank account. That being said, the original amount that we give the client at first is based on the rate that we quote you. Anything additional is based on a variable rate that is blended. So
Okay.
it's a little different. But
Right.
the client will decide how they'd like those funds, whether it's monthly, full, or they can keep it there, kind of like a line of credit. Subsequent advances, it's not guaranteed, just in case the market plunges. But they can call us in a month, 2 months, in a year, and say, "Hey, I'd like to withdraw 50,000," and that's based on a posted rate, and it's blended as well. But
Okay.
it's there, and they're not paying for it until they utilize it.
Right. So their first mortgage, if I'm understanding this correct, gets paid off first.
Yes,
And then
correct.
you get
Must
put
be.
into first place, basically.
Yes. So even if they have a home equity line of credit attached to it, we must pay that all off because it's secured against the home. We must be in
Right.
first position.
Okay. Very good. James, do you want to add to that?
Yeah, it's the same. Like Suzy and Home Equity Bank has helped like a few clients of mine out, and like they don't think they have an option. They resort to going on the private lending, and that's actually not a good fit for them at their age because, like I said, there's no income, right? So those interest only payments get very expensive. So with the home equity product, you at least have options. There's a lot more options. And I think that's where a lot of them have gotten saved, even with my own clients.
Right. So making sure that obviously people understand what this product is and that it's out there to help you. Obviously, you're not, you're not forced to take a product like this, but knowing the information is going to definitely benefit you and not hurt you in any way, because maybe this is a better option for you than to approaching the bank or a private lender if you need to access funds and you do have, a good amount of equity in your home and you are over 55. So just to kind of wrap this up, you have to be 55 plus, and that's anybody who is on title to the home needs to be 55 plus. You can receive up to 55%. Is that
Correct?
correct?
Yes,
Of your
yes. But
home?
and they don't have to be on title. So even if husband and wife, if husband is on title or wife is on title and husband is not, we still need to take them into consideration. We don't request for them to be on title, but we need to take them into consideration.
Right. Okay, perfect. And then obviously we have options in regards to open term,
Correct.
fixed term, those kinds of things. And really, this is just general information. You want to be connecting with James and Suzy for your specific scenario to see, what your options are and what is going to be best for you. Everybody's situation is different. Everyone's home is different. Your equity is
Right.
all different. You know what I mean? So you want to make sure that you're analyzing your situation and not taking somebody else's experience into account because it's not yours. I would highly recommend that you have your own experience, make your own judgment calls, and see what is best for you and your family, and kind of go from there. Because I do think that a lot of people do taint products like this because some so and so had an experience or whatever. I think it's important that you get your information firsthand.
Absolutely. And James mentioned this is not for everyone. It's just understanding that there's options.
For sure. Awesome.
Especially
Well,
in today's day and age.
yeah, definitely. Yeah, you definitely want to understand, what is out there and what your options are because, I mean, knowing is better than not knowing, in my opinion.
Yeah.
Correct, Michelle. Yeah.
The more education, the better. Even for like on the realty side, like getting them educated with it as well helps and goes a long way because they're trying to help their clients out the best themselves, right? And
Yeah.
sometimes they don't have the answers, and they're stuck, and they're like, everybody wants to do best by their clients, so
Yeah.
they don't want to see them in a situation when they could have kept the home and they could have maintained the payments even if they were at minimal, and they kept the house and the family. A lot of things are sentimental these days, and this is an opportunity for them to keep their home.
Yeah. And as realtors, being educated and knowing what products are out there and being educated, you don't need to be a professional at it, but you do need to be able to connect with people who are, to at least give your clients the best options out there. And if you don't know about it, you can't suggest recommendations. So being educated from the career side of things, like the real estate side, is also a very important element as well. So thank you guys so much for tuning in and letting our audience know about this product. Obviously, it's a great option to have available, and maybe we'll hop on again sometime and talk a little bit more about this.
Perfect. Thank you for having
Awesome.
us.
Thank you.